Welcome to Mo's Market Pulse. I'm your host, Sara Mokaram, founder of Mo Digital Solutions, where we help businesses hit their revenue goals and thrive. On this podcast, we talk with industry leaders about their business, market trends, growth strategies, and what's ahead. On today's episode, we are joined by Matt, CFO and CRO of Tachyus. Matt, thanks so much for joining us today. Really excited to have you here.
Thanks for having me, Sara.
Yeah. Before we dive into the market trends and where the future's headed, I want to start by just understanding your role and Tachyus's evolution. So when you stepped into the CFO and CRO role, what were the biggest transformational goals you set for yourself in the organization?
Sure. So maybe I can just take a step back and talk a little bit about Tachyus as a company, and then how I fit in and what the organization focuses on. Cool. All right. So the company's been around for, I don't know, maybe 10, 12 years. And the concept behind it was to bring artificial intelligence to the oil field. And the oil and gas business in general is we've gotten better, I would say, as an industry with respect to artificial intelligence in the last 10 years. We're still not aerospace or defense, but we've come a long way. And really, our main focus as a company is building really detailed reservoir models to help oil and gas companies better understand their oil reservoirs. And oil reservoir is, inside the rock where the oil resides, better understand the physics of it and whatnot, so that they're able to ultimately get more oil out of the ground. And when I started at Tachyus, I started in just a finance role. But I would say that Tachyus is sort of a story of two different companies. It started by some kids out of Stanford and Yale, 2013, 2014, where they raised a ton of money from Silicon Valley folks and spent the next 5, 6 years spending the money. And it seems like it was a great time. I wish I'd have been there for it. Ski chalets and private airplanes. But those guys were really smart, and I got a lot of respect for those guys because I have a job because of them. But they weren't, let's say, oil and gas guys. And so the company sort of transitioned away in the fourth quarter of 2020 when Fernando Gutierrez, the now CEO, took over, who's a 25-year oil and gas guy. I'm an oil and gas guy. The CTO is an oil and gas guy. Most of us come out of Schlumberger, which is a large oil field services company, or some of the operators like Chevron, et cetera. And we took a product that was designed to sell to oil companies, and we finished building out the product, and then we started selling it to oil companies. It's tough to move fast and break things in a 120-year-old engineering business. And ultimately, what we're selling is some deep engineering technology. So the company, has a fairly pragmatic approach to energy in general. In that, when you think about oil and gas, you look at the room you're in, Sara. Everything in that room is made from hydrocarbon. The computers we're talking, it's all hydrocarbon, and people often think, oh well, it's the car or the airplane, that's where the oil goes. And sure, that's true, but it's also the polymers in the room you're sitting in, and the resin on your shirt, and the coatings on your chair, and all that's all made from oil and gas. And so the industry, we believe, is going to be around for a while. And so our thought is, well, how do we help oil companies get more efficient with what they're doing? In other words, how can they get more oil out of the ground without having to drill more oil wells, which is expensive and it costs time, and it emits a lot of CO2 and whatnot. If you can get more oil without having to drill, just using a software only solution that reduces the amount of money you have to spend on what's called OpEx or operational capital, we think that's a good thing. And so when I started in a finance role, and then when Fernando took over, we started looking at the company as a whole, and we didn't really have a whole lot going on, because you might remember in the fourth quarter of 2020 was a unique time in let's say human history. There was that little virus that was going around. Also gave shocks to the energy industry. At one point in 2020, oil prices went negative for the first time. So we did, a lot of our clients were, in retrench mode, and we did the same thing. So we said, well, what can we do better? And we started focusing on, transitioning to a sales-driven organization. And so I took over the sales role as well, which is funny because most of the time you don't see someone in both finance and sales. I like to joke the biggest fight I have every day is with myself over pricing, right? Because like on the finance role, we need to make sure that we're running a profitable business, and on the sales role, I want to, get it done. I would say that from a objective perspective, our objective is to continue to grow the business. And since new management took over, which is, Fernando obviously leading the ship, and then myself and Dr. Pallav Sarma, who's a PhD out of Stanford in reservoir management, we've grown the company at a compound annual growth rate of over 150% annually. So, I think that's a positive, and we'll continue to do that in 2025. We've I would say gotten to a point where our forecast we've delevered a lot of it. In other words, we've closed a lot of what we expected to close, and we'll continue to do that. And we've done it by just having a relentless focus on customer satisfaction, getting to a point where, you know when the customer says this is what they want, we make sure that we delight them in giving it to them. Is
That's
that a long
amazing.
answer to a short question?
Oh, that's amazing. Thank you for sharing all of that. And reflecting on the past few years, what would you say stands out as your proudest moment so far?
I'd say my proudest moment so far is the relationship that the team has overall. Like, Fernando's fostered a culture of people who really tend to get along well, and we worked hard to spend a lot of time in the hiring process, making sure that you're not just smart. We hire smart people, but that you really fit in with what we're trying to do, and you wanna be here. And our attrition is extremely low. So yeah, I mean ultimately this is a people business. Yeah, we've got a cool product, no doubt. And when companies go start to understand our product, that's super helpful. But people buy from people. And so I would say the thing I'm most proud of is the relationships that we've built within the organization as a whole, and the passion that individuals within Tachyus have. Organizational perspective, or rather a just pure business perspective, I'm super pleased with some of the logos we have that are the biggest operators in the world, the biggest oil companies in the world are our clients. We work globally, so we've got companies here in the U.S., a lot of national oil companies in Latin America and in the Middle East. We've got oil fields that we work in Europe and Asia. So I mean, we've seen a lot of continued growth, and we've continued to add new products to our lineup, but not so much of a if you build it, they will come mentality, which was sort of the old Silicon Valley way, because we don't have that luxury anymore. We're a profitable, self-sustaining company that focuses on growing based on what the clients ask us for. We have a really unique platform in that we have a lot of physics and machine learning mixed together. We call it data physics, and the offshoots or use cases that we can use that platform to achieve, which are being driven by our clients, has been pretty spectacular. I mean, it's a really awesome thing when a client comes to us and says, "Do you realize what you have here?" And we say, "Probably not." And they tell us how they want us to repurpose a workflow, and then we're able to deliver what they're asking for. And I think that's pretty slick. I mean, again, I started my career in the oil field sweating outside, right? So, I'm probably not I have a very biased, like, unique look into the oil and gas industry. I'm a believer in it, right, wrong, or indifferent. But I've also seen, the ins, outs, and what have yous over the last 20 plus years while being in the industry. And so, you know, oil companies are tough cookies. It takes a while to get them to come around to what you're trying to do. And so when you get there, it's a really satisfying feeling. I take a lot of pride in how hard the team has worked to ingratiate themselves with their clients and develop relationships and deliver what the clients are ultimately asking for. And we can see that in our revenue.
Mhm. Great.
That good question.
Yeah. If you had to explain Tachyus's mission and value proposition today, especially to someone outside of this industry, how would you frame it?
Yeah, I mean, I think ultimately, if I was to describe our value prop to someone outside the industry, I would sort of go back to what I was talking about a few moments ago, which is that our value prop is to bring a pragmatic approach to the ultimate energy transition, in that we can help oil companies to get more oil out of the ground without doing super expensive, high emitting processes like drilling new oil wells. And we can help them to forecast out their future emissions so that they can start to run different scenarios. Hey, what if I buy an asset? What if I divest an asset? What if I do drill 100 new wells? What do these things do to my emissions, and what are my options to minimize those? So we've got products that allow oil companies to make those decisions overall. So I mean, I think that whether you're in the industry and you understand the detailed physics around reservoir management, which, by the way, I've been in the industry, like I say, for 20 years and been doing this a long time. And I'm not a reservoir engineer, so I don't really understand them. They're really complicated. Dr. Sarma, our CTO, he understands them well, but he also has a PhD from Stanford. Stanford wouldn't even talk to somebody like me. I'm too dumb. So like, it's complicated stuff, but you don't need to know all of that to understand that ultimately any company wants to be more efficient. And if they can get more of their end product without spending a ton of money to do it on inputs, that's a good thing. And that's really what we've focused on. I think from a mission overall, I mean, we want to be sort of the choice, I would say, for energy companies as they look to go towards digital transformation and getting towards a acceleration of energy transformation and whatnot. That's really where we're going. We want companies to be able to make data-driven operational decisions. We want them to be able to minimize carbon emissions. We want them to maximize profitability. That's sort of the mission that I would say we were after. But we view ourselves as a company that's very much aligned with the sort of accelerating the digital transformation for energy and sustainability. I think that's what it says on our website anyway.
Okay, perfect. And from your vantage point, what market forces or regulatory shifts are putting the most pressure or creating the most opportunity for companies like yours?
No, I mean, that's obviously a really important question, and I can sort of give you a long answer. So in 2020, when Joe Biden won, we're not political people. Almost the vast majority of the company that are not Americans. Most of our companies outside the U.S. But as you may recall, A, oil prices were in the doldrums because of COVID, and B, at the time, the Democrats were very much shouting from the rooftops that they were going to end the oil industry. Well, that's not good for a company that's, in the oil and gas business. And so we developed a new product that we call Orion specifically to focus on the energy transition, which is the one that I was talking about, helping companies to forecast out their future emissions. So that was a market force. I mean, that was really ultimately, scary. When the Republicans won, when Donald Trump won in November of last year, and it was drill baby drill, that had its other side of it. But here's what's, I don't know, a bit interesting to me. Over the last 4 years, you saw huge consolidation in our industry. Not the consolidation that you might see in telecom or aerospace, but you saw a lot of consolidation. Big companies buying up little ones. Oil price was pretty high, in the 80s for the majority of the time over the last several years. Why is that? Because globally, I mean, oil prices are often driven by geopolitical things that are far above my pay grade and intellect level. But certainly there was a lot of regulation that in the US, at least, the government put on to oil companies, whether those were environmental regulations, whether those were regulations that prevented new pipelines from being built to increase takeaway capacity, whether those were regulations that prevented more drilling leases from happening, whatever, that all contributed to a higher oil price, which, has positives and negatives to it. Drill baby drill in deregulation, while they certainly sound good, don't necessarily help the oil price. And frankly, tariffs don't help anything. I mean, I'm a free market guy, so I'm happy to say that out loud. And you've seen that with the oil price, and everything else over the last few weeks, coming down pretty significantly. I think it's right around $60 today. Maybe I can look. I don't remember. But all that said, there's only so much that we as individuals or a small company like Tachyus, there's only so much that we can control. And one thing we certainly cannot control is the oil price. I can't control how much oil, whether OPEC decides they're going to release more oil or drill less or produce less, whatever. I can't control geopolitics. I have zero control over what our government does with respect to tariffs. And so I try not to get too focused on that. Certainly it's not good when our clients are retrenching or saying, hey, we're going to delay investment decisions. That's not a good thing. But I think our clients would be the first to tell you that they don't like the uncertainty either. I mean, when you saw the Treasury Secretary over the weekend come out and say, this is all strategic uncertainty, for who? Because, fair enough. I mean, again, I'm not questioning the government. They're smarter than I am. They're there for a reason. But as a, small business operator, it's challenging when my clients are saying, hey, we don't know what we're going to do with our budgets for 2026 because we don't know what the world's going to come to. So what choice do I have? I can get fussed about that and throw my hands up, or I can just keep plowing forward and say, hey, we're going to keep on operating as if we're going to make our customers happy. And if we make our customers happy, they'll find a place for us in their budgets. And, I think somewhat some of the big oil companies have said, I thought was really wise, which was they said, look, we're not going to let short-term gyrations in the oil price or geopolitics, whatever, do to us what it's done to us in the past. We're not going to go cut tens of billions of dollars of capex right now, because ultimately what that does is causes us problems in the future. In the oil industry, from the time that, and I'm just making this up, but from a ExxonMobil or ConocoPhillips or Chevron or Occidental Petroleum or Shell or Total, doesn't matter what company, from the time that they make a discovery, they actually find, hey, say, we think there's going to be oil in this place, to when it gets to the gas pump, that can be a decade or more. That's a long time. If you make a decision today to stop trying to develop that asset that you've recently bought, there isn't going to be an impact today. But if enough companies do that, then 5, 7, 10 years down the road, you're going to have a production issue. Not enough companies have invested early, or the converse. And so I think oil companies have sort of said, look, we're going to not let short-term market turbulence stop us from doing what we think is best, which is to continue to optimize our operations and continue to be as efficient as possible and take advantage of the ability as an organization to gain operational efficiencies. And if I go fire a bunch of people or shut down a bunch of rigs or do this, that, I lose that. And so, my hope is that they'll stay the course with that, because at least for the moment, we have not been impacted, dramatically by macro forces at this point. And, so our objective is going to be to just stay the course and continue to focus on delighting our customers, delivering what they're asking us to deliver, going above and beyond. And we're confident that they'll find a place for us, as I was saying a few minutes ago.
That's a good perspective on this uncertainty right now, for sure. And when you look at the competitive landscape, where do you feel incumbents or newer players alike are struggling to meet client needs?
I think there's a couple of gaps in the market. Machine learning is pretty cool across all industries. And one of the reasons it's cool is because it's way faster. And ultimately, what I tell my clients I'm selling is time. The incumbents, the big players in the reservoir management space, have used sort of 60s math to build these big physical models using really detailed physics and whatnot that are 3D, and they're slick and they're cool. But uh, they're really, really slow. And then, like I said, machine learning is fast. But the types of data that the oil industry uses for reservoir models, the amount of oil that gets come out of the ground called production data, or the amount of fluid like water you inject into the ground called injection data, pressures, etc., sort of properties of the reservoir, volume and temperature and pressure, etc. All of that data is really noisy, meaning that you might have data that shows that the oil well produced for 35 days in a month. Well, that's probably not true. Or you might show that there was negative production. Again, not likely accurate. So things like that mean that if you just use a machine learning based reservoir model, going to be tough to trust because it learned from really noisy data. But it is fast. Converse is, if you just use a physics-based model, it's probably going to be right, but it's going to take you months or years to build. It's going to cost you a ton of money. They're really expensive to maintain, and you can't make sort of daily decisions with it. And we've combined those two things. And so we've said, hey, we're going to use that machine learning. We're going to build a really fast model, but we're going to marry black oil physics, which is a thing that all reservoir engineers are familiar with, and frankly, most people who work in the industry are familiar with. We're going to marry black oil physics to it. So the physics is going to solve for some of those things I mentioned to make sure that it weeds out the noise of the data, thereby allowing you to trust the machine learning model. So we've got competitors that are using just traditional physics. We've got competitors that are using machine learning, but that marriage of data physics, that sort of come bring it all together approach, that's sort of where we excel. And so we're not there to replace, if you need a 3D model and you're gonna, we're not there to use it by all means. The analogy I like is sort of the Schlumbergers and the Halliburtons of the world that have these traditional simulators or traditional reservoir management tools. They're like, classic cars from the 1960s. They're beautiful. They're expensive to build, and they're expensive to maintain, and they're not the fastest things on the road anymore. But you still want them. I mean, if you want to go to dinner with your spouse on Saturday night, you want to go in the classic car, no doubt about it. But it's not a daily driver. If you want to go to the grocery store really quickly between meetings on a Tuesday, you want a daily driver. You want the speed car. We built the speed car. And because we got that energy transition focus, we're sort of like the Tesla. We're super fast. Again, We're not trying to replace that classic car. We've tried to operationalize sort of reservoir management in a way that had never been done before. And we've got plenty of people that are in this space, but no one's focused on trying to solve that specific problem, if that makes sense. We have lots of competitors and lots of really good companies are out there focusing on this. They're just not focusing on the exact problem that we're trying to solve and that we've been successful in solving, I would say. Does that answer your question?
It does. And how do you position Tachyus when speaking with large enterprises that are, say, under pressure to meet both operational and sustainability targets?
Yeah, another good question. So in the oil and gas world, we have something called the Society for Petroleum Engineers. It's sort of like the New England Journal of Medicine or Nature or one of those. That's sort of the industry specific guideline or journal, if you will, or group of smart people. We've published a lot of papers there, the same way you would in Nature or in the New England Journal of Medicine. It gives credibility to companies because they see us do it that in conjunction with our clients. We've published papers with Pan American Energy, which is a BP subsidiary. We've published papers with ConocoPhillips. We've published papers with subsidiary of ExxonMobil. The being able to do that allows us to position ourselves with clients as, hey, we've been doing this now for more than 10 years. We've got a bit of a track record. We've got big logos published in peer-reviewed journals. I think that's maybe not the direct answer to the question you're asking, but I think that's sort of how we try and best position ourselves. Because look, I mean, again, it's tough to move fast and break things in a 120-year-old engineering business. The guys that have been doing this are not generally interested in the latest mousetrap. Sometimes, but often not. You're talking about assets that can cost tens of millions, hundreds of millions, or at some points even billions of dollars to develop. And, they're not going to take a really quick decision. Hey, I tell you to go make an adjustment in the oil field. And that makes total sense to, you and me sitting here. But like the manager that's been entrusted to run that $300 million asset, she's going to be quite careful before she says, sure, to some company, let's go make an adjustment to an oil well. So it takes a bit of time. They need to really build confidence that what we're saying, they're not the guinea pig. They're not the test case, and we've done that. It took a long time to get in there, but that also sort of goes back to the competition question. I mean, we spent a long time at this, and we were fortunate that in the early years we received funding from some of the best founders fund and some of the top players in Silicon Valley that allowed Tachyus to establish itself a little bit and to get its name out there and focus on things like publishing papers with clients as opposed to just focusing on trying to sell. Does that answer the question?
Yeah. So having that awareness and brand authority seems to be important, right? To
It gets you
bring
in the
that
door.
awareness.
But again,
Yeah.
we don't have, the same business card of a Schlumberger or a Halliburton or a Baker Hughes. So for us, it isn't just getting in the door. When we get in the door, now we have to prove ourselves. Okay, they've taken the meeting. Okay, now they've given us our first contract. But like, we're a SaaS business, and so our objective is to be there forever. We have to earn it, and it goes back to that culture that you asked for the first question that I think Fernando's done such a brilliant job of instilling, which is like delight the client at all costs. Delight the client. And I think we've done a really good job of that. I mean, at least when our stickiness as a product is indicative of that. We don't tend to get fired very often. Once we get in and we establish it and the client sees it and starts to use it, we tend to stick around because we're dedicated to making sure that they're happy. And again, the product is slick. And when they get to use the product is slick. I mean, it's something the industry has needed.
And so, with now shifting gears a little bit to growth, you're leading both the revenue and finance functions, which I know you even mentioned earlier is a different approach and view, right? You're getting to see both sides of things more holistically within the company. So, over the past year, what growth strategies, whether sales, partnerships, or marketing, and I know you've mentioned some of these papers and publications, have been the biggest impact that you've seen on revenue acceleration?
Sure. So from a strategy perspective, we've really focused on land and expand. And then partnerships have allowed us to do that. Two specifically. By land and expand, I think that's probably understood, but I'm generally saying, hey, when we get in the door, rather than, the best place in our industry is an old saying, the best place to drill for oil is where you've already found oil. And so we try and do that. Oil companies are somewhat perhaps different than other businesses. Somebody might tell you that, I'm just, again, I'm just throwing out an example. Someone might tell you that their client is Shell or ExxonMobil or Chevron, and that may be true. But those companies will have dozens or more assets, meaning individual business units inside of the company. And so if you work for Chevron, which might have dozens of assets that they operate and even more that they don't operate globally, but that they're involved with, and you're on one of them, well, that's great. But that means that your growth, but you're touching 1% of their wells, and you want to be touching way more. So the growth perspective is, once I'm in, to try and sell to these other companies. Sorry, the other assets within the company, which is like selling to other companies. But now you have word of mouth from somebody that's already there. That's pretty powerful. And so we've really tried to grow existing relationships, and that's been highly successful. And the reason for that's twofold. Again, easiest place to do it is when you've already done it. And two, a lot of time gets spent getting people to get comfortable with what it is that we're doing, because we're taking a new approach to an existing problem. We're trying to solve math in a different way, which is a funny thing to say, because there's like, solve math problems. You've got kids. I mean, you teach the kids how to solve, 5 + 5, you do it a certain way, same way you learned when you were a kid. So once you get over that hurdle, you sort of want to stick with it. So that's one, is the land and expand, and the two is with partnerships. And so we've partnered with two of the largest oil field services companies, Schlumberger and Baker Hughes, to basically use their leverage to get us in with some of their clients, and then we do the work, and then they're able to sort of use their relationship and whatnot to help grow the business from a project management perspective, et cetera. And that's been really valuable, because while both of those companies offer an enormous amount of value to their clients, neither of them has a product just like ours. And then they can go on and sell many other things as a result of what it is that we're doing. So that's been a pretty cool thing. And obviously they both, as all companies today, want to focus on digital revenue. We're a good opportunity to do that. So we've got a good relationship with both of those firms, and they're both fabulous companies. And so that's been really helpful. And again, it helps, when you want to go talk to Chevron or Exxon or Conoco or the National Oil Company of Saudi Arabia, or the National Oil Company of Kuwait, or the National Oil Company of Colombia, if you're doing it with a known entity. And so, these are just, again, examples. There's not specific relationships that we have. I'm just trying to be as generic as possible for someone who's not in our industry.
For sure.
I'd say those are the two growth strategies we focused on the most.
And can you share an example where a go-to-market tactic didn't work as planned, and what some of those lessons you learned from that?
Yeah, I would go back to sort of the way the company was founded and sort of the thought processes around it. When we built some of our workflows, we built them from what I would say would be more of an academic approach. In other words, they worked. They were really, the math was right, the physics was good, but it wasn't necessarily solving a problem the client had. The client would look at it and say, okay, this is cool. But you're dealing with dealing with really smart engineers. The thing about engineers is, if you ask an engineer to go build a bathtub on the moon, they'll get out their purple crayon and start drawing. I mean, but that doesn't mean they actually need to build a bathtub on the moon. So we were trying to sell a product years ago that solved a problem we thought oil companies had, as opposed to talking to the oil company to understand what their actual problem was. And once we did that, they were able to say, guys, your tool is great, but don't focus on A, focus on F. Everything in between doesn't matter. And we made that shift, and that goes back to that sales-driven approach that Fernando directed the company towards. I think that was the game changer. That was why we were able to start growing the business so quickly, because we started listening to our clients and saying, okay, that makes sense. So actually, what you want is for us to focus on, water disposal, or how water moves underground, or injecting polymer instead of water, or managing your emissions better. All these types of things. I mean, even on the emissions tool we built, we thought we were going to use the thing they use in California called OpG, which doesn't really matter the details of it. And instead, we started talking to clients and like, we don't know what that is, but we do have a problem with all of the EPA reporting. Can you help us with that? And we built a tool that nobody needed. And when we pivoted to it and did exactly what they asked for, was the EPA stuff, all of a sudden we have dozens of clients on it within a couple of years. And that's pretty cool. So I think that the biggest lesson learned, and it maybe it's cliche or it sounds silly, but I'd like to think I'm not a complete moron, and I didn't think about it enough, which is just listen to what your clients tell you their problems are. And if you can solve their problem relatively easily, it doesn't cost them too much. It's a problem they have because they told you they have it. They're probably going to buy what you're selling.
Yeah, that's actually really great advice. And it does seem so basic when you think about it, right? Is you want to solve the problem of whoever you're selling to. But a lot of times it is you need to listen and actually talk to them to hear it in their own words or exactly which problem is their
Well,
priority,
that's right.
right?
You get tunnel vision. Obviously, you set out to solve a problem. No one starts a company and thinks I'm just gonna no. I mean, and it might be a corollary to a problem somebody has, and I think that's the danger. Is hey, we have a problem with optimization. We have a problem with speed. Okay, so we're gonna go develop a product that helps you with optimization and speed. That isn't really what the problem they had is. Yes, at a high level, what we were doing did, eventually move up to optimization and speed, but on an actual day-to-day basis, it didn't until we made that shift, and now it does. And so we're sure it's still optimization and speed, but it's a totally different approach to that, a different workflow, different use case. And again, I think it's, cliches exist because they happen a lot. I think it's pretty common that that experience that we had, which is just, hey, you got to listen to what they're telling you their problem is and not what you think their problem is. And once we did that, everything changed.
And so, if you had full control over one friction point today, something that's slowing you down operationally or commercially or in any area really, what would you fix?
Wow, that's a heck of a question, Sarah. If I could fix one thing, just with the I mean, operationally or commercially, how candid do you want me to be here? I think, if I could fix one thing operationally or commercially, it would be being able to deliver on some of the client workflows faster than I can today. And the reason for that is nothing to do with Tachyus as it functions. It's just a matter of capital allocation, where we put our money. I mean, again, it goes back to that finance versus sales thing. I would love to be able to sell faster than I'm selling, but I need to be able to build out what I'm being asked to build out, and I need to do that all while running a profitable business. So, we're not Fernando, Paula, and I, we're not charismatic founders. If we knew how to go out and raise tons of money, I'm sure we would have done it. We're operators. We know how to run a business. We know how to run a business in the oil field. We know how to manage people. We know how to grow a business. We know how to stay, you know, in the black. That's what we're doing. And so, we have constraints of most small businesses in America. I have to, it can take a very long time for a client to actually pay. My payment terms could be 60, 90, 120 days from when I invoice, and I may have to pay my hosting charges every 30 days. So like these types of things are what we have to balance. If I could alleviate some of the constraints we have around capital allocation, I would say that I would love to be able to do that. I'm pretty happy with the way that the business operates, and as I was saying at the onset, the way everyone works well together. I mean, we attack challenges in a very passionate, you know, aggressive, respectful manner. Look, the proof is in the pudding. I mean, most businesses like ours don't exist anymore, and ours is thriving, and that's awesome. Yeah, I mean, again, if I was omnipotent, I'm sure there's a lot of things I would do. At least right now, that's one that comes to mind.
Perfect. And what are your top 2 to 3 milestones or company goals that you really feel like you guys need to hit over the next 12 months?
Well, we obviously need to hit our sales forecast, our revenue forecast. That's critical to our investors. It's critical to our P&L and balance sheet. Most importantly, it's critical to the overall morale of the company, because the most important thing is that the people see that we're being successful, and that management is leading them down a path that you know has a pot of gold at the end of the rainbow. Right? Far and away the most important thing that we can do, and we're doing it. The second one is that we hit our development goals with respect to the products that we're continuing to develop out for our clients. So again, it's not an if you build it, they will come. The client will come and say, hey, I'm looking for this type of functionality. I want to be able to do this. And then we have to go and we have an R&D team, a research team, and then a operational team and an engineering team that can make that idea into a reality. So, the research guys are doing the math and the physics, the engineering team is coding all of that, and then the operational guys are deploying it out when it's done. So obviously the two biggest things are that we continue to meet or beat our revenue targets. And we have an aggressive board who doesn't let us sandbag. So, we really are always out there scrambling and again, being pretty darn successful with it. And then meeting or being able to give our clients what they're asking for. And our clients have extremely aggressive timelines. I mean, like, there's a lot of discussions that I have with, I'll be in the Middle East in a week or two to go sit down with a very large client we have there and to basically say, okay, you want this in 3 months. I think it's going to take 8 months of development. Let us settle on 5 months and I'll add 2 extra people to get it done. So it's like, we must and we will deliver on those client requirements. Goes back to that whole thing about delighting our clients above all else.
Right. And so, just at the end, usually I like to ask an advice sort of question from the guests. So, if you could give one piece of advice to other leaders in the energy, tech, or SaaS space for trying to drive innovation and sustainable growth, what would it be?
Listen to your clients. No question.
That's good.
Listen to your
Yeah.
clients. And if you don't have any clients yet, listen to the people you want to be your clients.
Mhm. Yeah, that is really great advice. Well, thank you everyone for tuning into Mo's Market Pulse. If you enjoyed this episode, be sure to subscribe, leave us a comment, and join us again to hear more insights from leaders coming up on future episodes. And thank you, Matt, for taking the time today and joining us.
Sarah, you're awesome. Thanks so much.